where are the opportunities? And let's put a time horizon. Where are the opportunities over the next 1 to 2 years if sort of the recession plays out from a business perspective, but also from sort of a wealth creation perspective, from your opinion? Again, not financial advice. I'm curious just to walk through this one.
Let's throw in some context as well, right? Because I feel like often I perceive I have a view on what's happening in investing world. But the reality is I don't spend every day looking at it or digging into data. This is just speculation based on my YouTube feed and the shit talk we have in Slack, Grant. So it's like, how accurate am I really? Now, Goose, on the other hand, is like, this is something where you're deep in it. Like, you're actively participating in the market and have such a unique view compared to everyone else. Like, you really are data-driven and not, we'll call it, media-driven. So your perspective, I'm really looking forward to hearing here. Lay it down.
So I'm going to talk about property, and then Grant, if I get too deep in property, you can pull me back to some business.
I'll grab the fish hook. Don't worry.
Yeah. So the way I see it playing out, right, is that to expand or to continue the same thing of everything I've been saying, affordability is going to be the major trend. So you got three pillars that you got to look for: lifestyle, jobs, and affordability. Right? Everyone needs economic opportunity. Everyone wants to live somewhere where they feel happy and they want to have a good standard of living, and that kind of plays into affordability. Right? So where the opportunities lie in the real estate market over the next couple of years is going to be fundamentally driven by that decision, right? So there are other opportunities in other environments, but I think that that's going to kind of underpin everything. So how that is going to play out in reality, like in practical terms, is probably going to be that the regions are going to continue to outperform most of the capitals. You do have some affordable capitals, right? So the key to successful investing is to work out where demand is going, go there first and stand in front of it, right? And so, a lot of people are talking about the fact that Brisbane has been booming, but like the right time to buy there was 2 years ago, not now, like 2 to 3 years ago sort of thing, probably 3 years ago now. Same kind of thing goes with the Western Australian market, like that's right on that kind of cusp there. And so that plays into that, exactly what I was talking about there, right? Lifestyle, jobs, and affordability. You've got to have all three of those factors. So personally, I think that until, I actually think that that's going to be a really long trend. I think that there will come a time where it's going to make sense to buy back in places like Sydney and stuff like that, but we're probably just going to be a way off yet because it's more volatile. Because you got to remember, Sydney has like largely decoupled from the rest of the Australian property market. It zigs when the rest of the country zags. There's a common belief that Sydney leads the rest of the country. If Sydney goes up, then nationally there's going to be a boom, and if Sydney goes down, nationally there's going to be a decline. And once upon a time that may have been true, but that actually, if we go back to once upon a time when that might have been true, you're actually talking about when the aggregate values were all quite similar, when the Sydney median price in Sydney was not that different to the median price in, Perth, or in fact in Dubbo, or in fact in, Townsville, right? They were much closer together. And then that actually then, because that's an extension of what I'm talking about in terms of the affordability piece. Because what's happened is that the Sydney market particularly has become radically decoupled from the rest of the country, and to a similar degree, Melbourne and Canberra. But even in Melbourne, so the thing about Sydney is it's become more decoupled than, say, Melbourne. In Melbourne, there are still areas which are performing well, but they are the more affordable areas, right? So you've got to look at that affordability play. And also what's happening at the moment is a trend towards apartments, which is really interesting, right? Now, this is not investment advice, and I'm not saying go out and buy apartments, right? Or I'm not even saying go buy in Perth, right? Because there's an argument to say you might want to get ahead of the curve somewhere else, and all of that kind of stuff. But you've got to look at these global trends and understand how do people want to live, and where do they want to live, and why do they want to live there. And then you've got all these other kind of macro factors, which is, mobility and stuff like that. Because more people are able to work from anywhere, there's less focus on working in the office. That actually encourages people to be able to go and seek out the lifestyle opportunities they want. So there's less demand for, people to live in cities, but then when they do want to live there, they want to live more affordably. So they might want to go and, buy apartments. And the house price versus apartments, there's the bigger gap than it's ever been before, particularly in capital cities. Downside with apartments, right, just to be super clear, so everyone doesn't race out and just start buying apartments. The downside with apartments is supply risk. So there's opportunities for other developers to build more apartment blocks nearby, and then that can increase the supply. And, stagnate the values and all of that kind of stuff. Plus, you often have other costs in the asset, so strata fees and all of this kind of stuff. And plus, you don't own the land, you own the air inside the box, right? So there's some downsides with apartment ownership as well, but I think that there's going to be some growth opportunities there for the right type of portfolio and the right type of investor. But I think that fundamentally, people need to operate from a set of principles rather than like looking for the latest flash in the pan, like what's the hottest suburb now? Because I could tell you all of those too, right? But the point is, you actually need to work out what your investment thesis is and what your investment philosophies are. And it's really simple, right? Intelligent property investors are value investors. That doesn't mean that they're looking for how to buy the cheapest properties or screw people for the best deals. It is simply looking for good quality assets that other people would want to own, right? That are producing more income than they use. Really simple, buying the right property in the right place at the right time. That's what Warren Buffett does, right? And it works. It works really, really well, and it's really, really stable. And the thing is that when you enter into an environment where a lot of other people are saying, oh, this is a bad idea, it's great. It's awesome, because that's the time to get ahead, right? So there's a great quote by Mark Twain, which says, when you find yourself standing on the side of the majority, it's time to pause and reflect, right? And obviously everyone's probably heard, the Warren Buffett quote, be greedy when everyone else is fearful and all of that kind of stuff. Now, I don't like the terms greedy and fearful because it puts the wrong context around how to think about these kind of situations. But the reality is, right, that if other people are perceiving a negative situation, and if you're able to cut through that and look at the facts, right? So in 12 of the 15 national markets, sales volumes are going up and prices are increasing. Doesn't sound like the property market's going to crash to me. If you can cut through the noise and start to look at the facts, you can actually make decisions that other people won't. And that's where you get your competitive advantage. And that goes back to your point at the start, Charlie, is like, if you can see the opportunity when everyone else is seeing fear, you can actually make massive, massive strides ahead. And now, just to be really, I want to kind of just point something out here, right? So my business fundamentally is driven around helping people to invest in property, right? So it might be very easy to say, well, that's all well and good, right? But Goose has got a vested interest, and so he's just spruiking up the market and saying everything's going to boom and everything's going to be great. But I'm also a business owner, right? And so if I thought, if I thought based on fact and data that the property markets were going to decline and that was all going to happen and there was going to be a big crash, what do you think I'd do? I would be designing products and services around that opportunity, right? I'd be saying, okay, well, what do we do in that kind of environment? Now, I'm not doing that, right? I'm not doing that because there's too much opportunity in front of us. And I'm looking, like, we have like 6 PhD data scientists on the team and stuff. Like, we're not just guessing at this. This is science, right? And so I think that if people can kind of cut through the noise, they're going to see that there are lots of opportunities. Did I answer the question effectively?
That very well, very well. I always get fascinated when you kind of cut through I just call it the mainstream stuff that most people consume and actually understand sort of the layer that sits below it. And to your point, Charlie, before, it's like, yep, cool. All right, Goose, when you've got the data, where does this kind of look at? So from a business perspective, like this current, I'm going to call it the current environment. So from a property perspective, makes complete sense. From a business perspective, I know we've kind of touched on it a little bit before, but how exactly should they sort of be thinking about this, noting sort of where it's kind of currently at and where it looks to be going based on some speculation? Yeah,
so I know it might sound like I'm just banging the same drum here, right?
Which I'm fine with, because I want to hit this home for absolutely everybody.
Yeah, so if you're a business owner, right, and so just to be clear, I'm doing this too, right? So I'm not just kind of making this stuff up. So because there is economic uncertainty and no one's got a crystal ball, right? What you need to do is you need to prepare for that. So what does that mean? You need to, as a business owner, make sure you're looking at your expenses. Like what are you spending money on? How are you spending that money? And what do your margins look like? What are your cash buffers looking like? How are you making sure that you're set up just in case there is, right, kind of something going on, right, in the future that you need to be prepared for? Once you've kind of got all that in check, then you can start looking again at the opportunities, right? Because you've got to you have to protect your downside before you can go for the upside. It's really simple, right? Otherwise, you're going to overexpose yourself to too much risk. So protect your downside, make sure you're squared away, make sure you got good plans, make sure, and even if you don't have rock solid foundations, just make sure you're thinking through what all of the situations might be and specifically how you would handle them if things went wrong, right? Right? Because having the resources is one thing, but having a plan is also really good and being decisive about it, right? So even if you don't have $1 million sitting in the bank or 12 months worth of cash buffer or 6 months worth of whatever it is, right? You can also go, okay, I just like be a pragmatic optimist, right? But be pragmatic about it and say, well, what situation am I in? And if things didn't go well, specifically what decisions would I make? How quickly would I make them? And what would I do, right? Because that kind of clarity is what's going to set you up to make better decisions. Now, that being said, right, now that you've kind of protected your downside, and this is what everyone should be doing in their real estate portfolio too, by the way, right? So just to be, they're not different, they're the same, right? And so then from there, then you can look at the opportunities. So it's like, okay, got the downside covered. I either have the resources or know what I'm doing or know what my opportunities are and all of that kind of stuff, right? Then you should start seeking out, how do I maximize my exposure to upside, right, without maximizing my risk, right? So yeah, in real estate, that's really easy because even if you're increasing your debt, as long as you've got really good income producing assets and they're covering all of their costs, hey, it's basically low risk and it's all good. In business, you could be seeking to do other things which would dynamically change your situation or allow you to own more of the market. So that could be finding ways to offer more services to your current clients in order to increase retention, increase margins, increasing or changing your packaging, your pricing, and all of that kind of stuff, changing your model, and looking for those opportunities. Because I think that there are a lot of people who won't do that, and the ones who can think about how can I maximize my opportunity in this environment will be the ones that get ahead. I mean, I know, as I've said that I'm doing this too, right? So we are looking at exactly that. We're looking at, cost control. Okay, where are we spending money? Do we need to spend the money there? Is it still appropriate in the current environment and where we're going? All good. How are we shoring up and making sure that we're protecting our downside? And then what are the opportunities to grow? Like, how do we continue to grow, right? Because if we can double or triple the size of our business over the next 12 months, when other companies might stay exactly the same or go backwards, that creates a quantum gap between where we are and where they are, right? And so you just need to be able to think strategically. And in order to think strategically, you can't think strategically if you are making decisions based on what you read in the paper today. You just can't do it. Like you can't. You're going to open up the paper and it's going to be another bad news story. And then you're going to go, oh my God, what am I going to do to react to that, right? In order to think strategically, you need to be able to zoom out, survey the landscape, make informed decisions, and also know your numbers, right? You've got to know your numbers. I mean, before we jumped on this podcast earlier, what was I doing? I was analyzing our financial models. Why? Because I'm thinking about making a decision in the business, right? And so I need to be able to then look into the distance and look at my numbers and go, does this decision make sense? What kind of risk exposure is there? And what am I going to do about that? So then how that relates to the business and wealth building kind of side of things, that's also going to dictate your choices around, like, is this even the right time for you as a business owner to invest in property? Because for some of you, it might not be. You actually might have the resources there, but it actually might make more risk-adjusted sense for you to just sit on that cash and make sure you got the buffer to be able to make better business decisions, because on a macro, in 6 months or 12 months or 24 months time, that's going to fundamentally change that outcome and allow you to do way more stuff, right? Vice versa, right? If you've already got your downside protected and everything's sweet and you're in a low recession risk industry and you've got everything's nice and stable, you could then, and you've got some surplus cash and surplus income, then you could say, okay, cool, killing it there. How do I then go and kill it over in outside of business and start building wealth there? Because there's loads of opportunities there.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.